Hello, everyone. This is Kevin Gaugush, Chief People Officer for ATG today, and I'm joined with Tim Truncellito from the Rowley Group. And today, Tim is going to talk to us about long-term care insurance, something that we haven't offered here at ATG, but it is something that we're looking at as a potential voluntary optional benefit if all things go as planned for the year 2024. So today's session, of course, is a recorded session, but if you have questions, please feel free to email me and I can put you in touch with Tim as well. So, Tim, I know many of our members have already spoken to you in the past around open enrollment. A new topic today, long-term care insurance. So, what exactly is long-term care and why should I be concerned about that?
Yeah, thanks, Kevin, for bringing me on here. So long-term care insurance kind of fits into a gap between life insurance and disability insurance. The most common way to think of it is applicable to nursing homes. That's where people typically think about long-term care. Once you're in a position that you have professional help on a daily basis, you're older, maybe you have a disability, but it's actually a little bit broader than that. So it can help with age, illness, disability, but it's really all built around what's called ADLs, or activities of daily living, which we'll get to. And long-term care is exactly that. So typically it's for an extended period of time that you're going to need this care. So months versus weeks. Disability, you think short-term accident, illness, injury, and you're going to get back to work. Life insurance is pretty cut and dry. Long-term care is to prepare for personal and also financial protection once you end up in a situation where you do need assistance with those ADLs for a long extended period of time.
Great. And these ADLs that you talk about, I think you said they are activities of daily living. What exactly does that mean? And what are they?
So the 6 ADLs are broken down and universal across all contracts. And it's really eating, transferring, think of walking, bathing, being able to feed yourself, toileting, so being able to get yourself to the bathroom, and then continence counts as your ability to think on your own and make decisions on your own. So you have those 6 categories of function basically that they're looking at, and if you lose 2 of those, in most contracts, that's the standard. So if you lose 2 abilities to do 6 of those ADLs, that's when your long-term care coverage is going to start to kick in. So if you lose mobility and you also, lose the ability to dress yourself, that's common, or you lose the ability to do the toileting and transferring, usually a few go hand in hand. And the contract is contingent upon a doctor basically providing evidence that you're unable to do some of those ADLs, and long-term care provides the funding to have somebody help you function as you could.
It sounds like, and correct me if I'm wrong, I mean, although the term long-term care implies like it could happen, it's probably forever. I imagine there are cases where someone might have 2 of the ADLs and then return being able to do something, and then they would be off LTC. Is that true?
Yep, and that's where I mentioned earlier, people think of nursing home often with long-term care, but the contract can also help and take care of you when you're still at home, or maybe you're in a rehab facility and it's a significant injury and you've lost some of those ADLs, but there is a path to recovery. So it's only a temporary period where you're utilizing the long-term care payments, and then you could, return to a place where you can do all your 6 ADLs on your own again and go back to work or your regular lifestyle, whatever it may be.
Great, great. So that's long-term care. Why should I be thinking about some type of insurance coverage for this?
So the two big things are, personal protection and financial protection. So long-term care is there as a way to kind of plan ahead for the potential cost of being in one of those care situations, whether it's home care, assisted living, or nursing home, all the way to hospice care. In most situations, if you end up in a position where you have to go into one of those, daily care situations, if you do not have the means through a long-term care policy, they're going to start utilizing your nest egg essentially. So there's layers of attrition that they'll go through to help pay for the cost of whomever is taking care of you. So, your retirement savings, your savings accounts, then they start looking at your assets, your home, your cars, whatever it takes that they can liquefy into cash to help pay for your services. So if you have a long-term care policy, that's going to be the primary payer, and it's going to protect the liquidation of all your other assets. And, I'm imagining that's either there to take care of you if you do get better, or something to pass on to your beneficiaries.
Great, great. Now, you mentioned the financial protection. I get that. How does a trust play into that? I know some of our members have trusts set up. Does that protect you against from that liquidation?
Absolutely. So trusts are an important part of long-term care planning, but they're also an important part of general financial wellness. You do have access to trust resources through your EAP at no cost. You can get basic trust guidance. So if you do not have a trust in place, then that's a resource that you have available to you and you don't have to pay an attorney. The trusts essentially can take ownership of your assets. So you can move your life insurance policies, you can move your house, your cars, everything that has that liquidation possibility. When it's moved into a trust and the trust is the ownership and you designate your trustee, that prevents those assets from being part of that liquidation. So that's another layer of financial protection that you can take advantage of by utilizing a family trust or a personal trust to start owning assets. And then if you do have long-term care, that's your primary payer. If your assets are in a trust, then it's a much more difficult process for them to access those for liquidation. So then you go right to government assistance payment and your nest egg's protected.
Got it. And government assistance, is that Medicare? I mean, does that cover long-term care? Maybe I don't need this if I've got Medicare in the future.
So if you're of Medicare age or retired, they are the Medicare plans are designed with limitations. So they'll get you typically 100 days of skilled nursing or skilled care in a facility. Beyond 100 days, it depends on what kind of supplement or Medicare Advantage plan you might have, but that's going to run out of steam pretty quickly. 100 days sounds like a long time. It's 3 months essentially. But if you're going to be in a nursing home, the average stay is 2 years. So Medicare and your supplement is only going to carry a small piece of the pie. Medicaid can also help. Medicaid is going to help pay for some of your care, but there's still going to be a portion that needs to be funded by the government on top of your Medicare and Medicaid. And that's why they're looking to liquidate assets, because, if they can use your money first, they would prefer that versus having to pay out of their pocket to take care of you.
Got it. Great, great. And I think you mentioned like beyond the financial protection, there's this idea of personal protection. Do assisted living or nurses' homes like treat you differently if they know you have LTC insurance? Does that give you priority listing?
Yeah, so whether it's right or not is a different discussion, but if you have two people who show up at a nursing home and one has private insurance and one is relying on Medicare, Medicaid, the private insurance person is going to get the corner room with the window. You'll probably be by yourself because there's a guaranteed contract that's going to be paying that facility. Getting funds recouped through government assisted patients is just more difficult. So you definitely get priority treatment as a carrier of a personal long-term care policy, because you'll probably pay more to the facility and it's guaranteed cash flow. So it certainly helps when it comes to the pecking order of care. And also, if you don't have an extended family and maybe you are in a position where your spouse has passed and you're on your own and the kids have moved away, and you want to stay home, that all of a sudden becomes a cost. So you don't want to leave your house. No matter, I saw what happened to my parents. I'm never going into a home. Fine, you can stay home, but you're going to have to be able to pay for people to come and take care of you. So if you want to keep your personal comfort by staying home and getting taken care of at home, well, you're going to have to hire professional nursing, someone to do your grocery shopping, all those things to be able to stay in your house. And that's where long-term care can help cover those costs.
Great. And I know you mentioned personal experience you have. I think most people probably have had some personal experience with a family member in long-term care. A statistic I think I read recently, up to 75% of individuals will need some form of long-term care at some point in their life. So I think I've got an understanding of long-term care and how insurance may help protect my finances, give me options that may not be available to choice, whether it's in-home, assisted living, nursing home. How do the policies get structured? This sounds very complicated, and I imagine it's a complex product.
Yeah, so really, when you're talking long-term care, it's a very personal discussion, and it really has to be done one-to-one or with your spouse, with someone who can advise you on the best possible policy that you can afford. There are a lot of things to take into account, which is why it's always hard to talk pricing. People are always curious, well, what does it cost? Well, there's a bunch of factors. Your age when you sign up, your health when you sign up, potentially, how much benefit you want the contract to pay, how long you want the contract to pay. They make hybrid policies where it's life insurance and long-term care. So whether you use one or the other, long-term care gets the stigma of the use it or lose it. If you have pure long-term care insurance, you're paying into the policy all these years, and you have a sudden passing, so heart attack or something like that. You never needed it. You never went to a facility. Well, then it feels like you wasted paying premium to that contract all those years. That's why they've created these different contracts that could pay a life insurance benefit or take care of you. They have contracts that you can share with your spouse and shared pool of money, because at 75%, well, odds are one of the two of you are probably going to need it. So you both have access to the same bucket, whether one uses all of it or you split it 50-50. There's a lot of designs of these contracts that can really influence price point. If you want that home care aspect and you want to stay in your house, there's also price point if you just want a cash benefit to be paid, no questions asked, versus having to provide receipts and additional proof that you are in need of the care. There's liberal contracts, there's more strict contracts. There's a lot of elements around what goes into it. Now that sounds complicated, but again, I think when you look at your personal situation and you have the conversation about what you specifically might need, it gets refined pretty quickly, and then you can start looking at price point.
Got it, got it. Yeah, and I know there's inflationary riders, and I think you talked about tying it into potentially a life insurance policy that has some fixed amount benefits. How does that work if I go into sort of a long-term care situation, let's say for 6 months, and then unfortunately, as we all eventually will, pass away? Is it either or is it do both kick in?
Yeah, so think of it as paying premium towards that bucket of money again. So just for example, I have a $500,000 hybrid policy, they like to call it. So there's a bucket of $500,000 sitting there. If I go into nursing care for 6 months, maybe I used 120,000 of that 500,000 to pay for my care, and then I pass. Well, that means there's still 380,000 in the bucket, and that's the benefit that would go to my beneficiary as a death benefit. So if you use all 500,000 for, you're gonna end up in the home for longer than planned. People sometimes are in there 3, 4, 5 years, and that bucket gets completely atrophied. Well, then there's no life insurance policy. But it does get you the either or, so it doesn't feel like a use it or lose it contract.
Got it, got it. And you throw around some numbers there: $500,000, $500,000 bucket of money, length of time. Like, what does this cost? I mean, I know I was surprised at looking at some of the costs for either professional home care or assisted living care. Can you give us a framework of what those costs might be today in 2023?
Yeah, so when you're thinking about, well, how much protection do I need? One of the factors is certainly where you plan to potentially retire. Every state is going to have a different average cost of facility, and it depends on population. How much does the care cost? Massachusetts, great hospitals, but also very expensive care. So it's a more expensive state to pay for long-term care. When it comes to your professional home care, so let's say I'm that person, I don't want to leave my house, but I don't have the kids that have the time to come over and take care of me every day. That's running in the $30 to $33 an hour range to have someone come every day. So that adds up pretty quickly. For those cash style benefit policies, so let's say I just want X dollars coming to my family member because they're getting my groceries and they're helping me with my medication. It costs about $150, $160 a day for somebody to take care of you. So when you factor that in, if you're home for 6 months, again, it adds up pretty quickly to ask a family member to take care of you. There's costs associated with that. Once you get into the more skilled facilities, so assisted living, maybe you can still get around, but you have some continence troubles. Maybe you can't dress yourself. So you're kind of halfway there, but you still have some independence. So those assisted living facilities are in the $5,500 to $6,500 a month range, because you are still taking care of yourself somewhat, but there has to be a good amount of cash flow for the facility to provide skilled nursing and emergency services and all those things. So you're independent, but you also have the watchful eye and you have the care right there if you need it. Once you get to full-blown nursing care, that's where the bigger numbers come into play that tend to open people's eyeballs a little bit. Massachusetts right now, the average monthly cost of a nursing home is $14,350 a month. So it's a big number. So that's, you need full care, definitely 2, maybe 3, 4 of your ADLs are no longer, on your own. You need skilled care daily. You need someone that brings you your food and helps you eat. I think everyone has some experience with the nursing home lifestyle. Now, if you go to a state like Vermont, it's $12,585. So that's a $2,000 difference. That's a $20,000 plus difference just between 2 states. And that's why, taking into consideration if you might go south, everybody goes to Florida, South Carolina. If that's in your retirement plans, then you need to look at kind of average cost of care in those areas.
Great. So I understand what long-term care is. Most people will probably need it either themselves or a spouse. I understand how insurance can help protect my finances and help me maybe get the type of care I want and the facility I want. And obviously the costs are large. ATG, we're always trying to help our members understand their future and provide for them and the family. Besides that, are there other external things that are happening that have caused us to look at this in the marketplace here in Massachusetts or across the country as a topic around long-term care and insurance?
Yeah, so the topic of long-term care has gained interest primarily through the boomer growth. So you have a large bubble of population that's coming into retirement age that's going to eventually need these skilled care facilities or home care. And that prompted the discussion of where are we going to put everybody and who's going to help pay for the cost. And some of the states have taken that action independently. So the first state to truly pass a law based on long-term care was Washington State. So think of paid family leave in Massachusetts, similar type tax. It comes right out of your paycheck. You're just paying into the program and everyone in the state has access to it. So that exact concept is being utilized for long-term care insurance. Now, Washington was the first to get to the front of the line. And typically with any new program, there's going to be some kinks to work out. There's 6 additional states that are now having the real discussion about the possibility of making this happen. And Massachusetts happens to be one of those states. The questions that come up are, what's the appropriate cost to tax? What about transferability? I work in Massachusetts for 30 years, but I do want to retire in Florida. Am I out of luck? Do I not get any access to that fund that I paid into for the last 30 years? A lot of questions still around the mechanics and the cost, but it's certainly a front of the line topic when it comes to overall medical care because of the age of our population currently.
Got it. Okay. So now, before we talk about the possibility of offering this as a voluntary benefit at ATG, some of our members may want to go out there and explore this as a product, as an insurance that they can buy for themselves. I know cost is hard. You talked about that, but could you walk me through sort of the process? And is this something that's guaranteed if I go out there and is willing to pay for it, I'm going to get? Or how does my health history impact my ability to get this?
So, like most insurance, the younger you are, the better. So the earlier you can kind of start planning for these things, the lower your premium is going to be. So age is a factor right away. Male, female is a factor. Females tend to be healthier and live longer. That's just data. So that male female rate is going to be a little bit different. The normal things like smoker, health history, all these things can impact premium. And if you're looking at a true individual long-term care contract, or maybe one of these life long-term care hybrids, it is medically underwritten. So if you've gone through a life insurance application, it's similar. Your family history matters if you have any potential hereditary conditions that run in your family. And as you get closer to 55 and 60, they also include additional cognitive testing, which is not typical to life insurance. And the reason they do that is because cognitive ability is one of those ADLs. So if you have a hereditary, predisposition to Alzheimer's, they might include a cognitive test, which might show them, a little bit of loss of cognitive ability at your current age, and that's going to impact premium again. So applying for a personal contract is certainly a more extended process. What we're potentially hoping to bring to Advantage Truck Group in the voluntary realm is a simplified underwriting product. So potentially still questions about some health history and your current health, but staying away from true exams and testing and all these other things. The reason I'm saying hopefully is because these long-term care products have a history of trouble with the insurance community on a group basis. So a lot of carriers used to sell group long-term care. They underpriced it. They got into some issues financially, and everyone kind of pulled back and said, well, we're not doing this right. 4 or 5 years later, now that we have more data and actuaries can get a better grasp of what they should be charging and the spread of risk, we have some potential opportunities that still need to pass the typical state regulations and approvals to get them as a true offering to you all. But the hope is it's going to be true long-term care or hybrid long-term care with life insurance, individual contracts, but with size, we can simplify underwriting and also impact premium for the better for everyone.
Great. I know one of the things you mentioned there was life insurance. Are there ways to sort of take my current life insurance and get some value out of that, or add the rider to it, or any tricks there too?
Yeah, and this may be more if you're thinking of your parents and their current age. So you have term life policies that tend to run out their 30 years and have gotten them into your 70s, early 70s, and the cost of keeping those policies is usually astronomical. At year 31 the premium goes through the roof, and a lot of people just let those policies lapse. I don't need the life insurance anymore. There are ways to get value out of those existing term policies potentially, and use them as an asset to purchase long-term care insurance. Also, if you have annuities, or CDs, long-term care and hybrid can also be purchased on a lump sum basis at a pretty significant discount, compared to paying like a true policy monthly over time. If you have access to a substantial premium, whether it's sitting in a CD or an annuity, and you can transfer that into a long-term care contract and keep the tax benefit. So if you have a tax deferred annuity, you can move that cash into a long-term care policy and still take the tax deferral. So you're not disrupting the taxability of that cash. Yes, you're dropping the interest rate, but you're purchasing that large bucket of long-term care funds that would be used maybe for life or long-term care, or directed purely to long-term care. So if you have older life insurance policies, or maybe you have annuities or CDs that are kicking around, you can take advantage of those funds you already have and turn them into long-term care.
Great. Okay, so long-term care, we understand what it is. Insurance, obviously a lot going on in the marketplace, including obviously the shortage of people to provide this care, which is probably part of what's driving up that cost. And this is a great way of having insurance to protect against that cost, maybe get you the place you want. Hopefully we'll have something to be able to provide to our members, because the advantage, I think, is if we have a group policy, it's probably a much simpler process to get approved for it as an individual. And then this would be portable then too, like our other voluntary benefits, so that it doesn't lapse because this is a product that I probably am going to be using once I've retired and have left my gainful employment.
Yeah, so that will be one of the nice benefits, is that you are setting up a true individual contract with the carrier. While you're with Advantage Truck Group, it'll be, payroll deducted to pay premium and make the process a little bit simplified. But whether you retire or move or whatever happens, you would just take over the premium payment and take the contract with you. No change in cost or plan design or anything like that. What you're getting initially is the actual contract that you're signed into for the duration.
Got it. So I know this might be a new topic for many of you out there that have listened to this. We had a session in Shrewsbury, and I think a lot of people, this is the first time they really thought about it. It's a topic everyone's aware of in the background, because you can see what's happening to maybe your parents as they age, or other family members, or you read about it, but it's not something that is talked about as much as 401k, disability insurance. And I guess that raises another question that came up, which is, well, if I have this, should I still be taking out short-term disability and long-term disability? Am I protecting the same thing with that?
Yeah, and that's where you go back to specifically what each one of those contracts is covering. So if you decide to take a long-term care policy, you're not exactly replacing what your disability policy is currently there for. Disability insurance is protecting your current income while you're working. So in the short term specifically, you have your short-term disability to replace income and your long-term disability to replace income. Long-term care is directed to help you pay for care. It also has a 90-day wait, typically, like your long-term disability. If you just have long-term disability, then you're protecting your income, but your income is going to be going directly to your care. Now, the idea is you have your income that you can still keep for yourself to pay for everything else. I mean, you still have car payments and your house mortgage, you have electricity, cable, all those things that still exist. Once you lose your 2 ADLs, it doesn't mean the world stops and you don't get bills anymore. So having both is really important, because they're designed to protect different pieces of your financials.
Got it. Great. So I imagine many of you might, explore this, at this point, understand what the cost might be. Again, as Tim said, we're hoping to have something, but really that's up to not only the insurance companies that are looking to offer this product, but the state regulator. And right now, I don't think there's anything on the market, but we do see some signs that by the end of this year, there may very well be. But in the meantime, if someone has questions, Tim, can they reach out to you to help get more details about their specific situation, and maybe just an estimated cost of what it might be for them based on the benefits?
Yeah, absolutely. So I will be providing a mini questionnaire that you can ask your HR team member for. If you want to fill that out, and they can get it over to me, I can kind of give you a ballpark of what a true individual long-term care contract looks like. And again, that compared to this potential group product, how much of a difference in cost, all those things, that's still a little bit of a question mark. But if anything, it should give you a kind of a dart on the dartboard of the general idea of what that would cost you to have that coverage in place.
Great. I'm sure some people will take you up on that. And again, if anyone has questions, please, reach out to myself, any of the HR members, Scott, Rachel, Kathy, Dan, Clara. Tim, any final thoughts, anything that we missed on this topic today?
I think the one important thing is, like any insurance policy, it's designed to be a piece of your overall plan. So it shouldn't be thought of as a absolute necessity, or you're replacing something. It's just, there's a gap there between life insurance and your disability and your 401k. And this is one way to provide that additional protection. So we always say, you know, you do want to talk to a financial planner, you want to talk to your CPA, especially when it comes down to if you are looking to transfer assets like an annuity into a contract like that. You want to look at the entire picture, you know, and its affordability too. You know, ideally, everybody has personal long-term care insurance. That would be awesome. But you have to prioritize your financials, and if it fits into your plan, excellent. And maybe that's where the contract adjustments can be made, so it covers, you know, half of that nursing home cost. It can still help with some of the cost of care. So just think of it as another piece of the pie when you're looking at, you know, your overall financial goals and your financial plans.
Great. Well, thank you. And one final note, I know you mentioned the EAP for people that don't remember all the acronyms. That's the Employee Assistance Program that's provided through Lincoln Financial. So if you have any questions about how to access that, we'll share that information as well. So hopefully everyone learned something today. Hopefully we didn't scare you too much about what is a topic that obviously is serious and concerning, but obviously, as Tim said, part of your financial planning for the future. So thank you, Tim, very much for presenting this, and we look forward to seeing you in person come November for open enrollment. Take care, everyone.
See you here soon. Thanks.